This is the Money Loves Women podcast, the podcast that will guide women to wealth and an extraordinary life. Here's your host, Dr. Deborah Ekstrom.
This is Dr. Deborah Ekstrom for Money Loves Women. Curious about your wealth building potential? Learn your money type. Take the money personality inventory to discover ways to better leverage your strengths and avoid a walk on the dark side. Go to Money Loves Women website to take our money personality quiz. That's moneyloveswomen.com. To your wealth and happiness. This is Dr. Deborah Ekstrom. This is Dr. Deborah Ekstrom for Money Loves Women podcast. I'd like to welcome Henry Yoshida of Rocket Dollar. He is the co-founder and CEO and financial technology product creator, by the way. He's done this as a serial entrepreneur. Currently, with Rocket Dollar, he's helping people unlock their retirement funds to invest in other products and assets, which are private. He works with a web-based platform, and through that, people can invest with tax-advantaged retirement dollars into private alternative investments. And we're going to talk about that a little bit more, and we're going to let Henry talk about that. He is also a certified financial planner, and he's a licensed realtor and has 20 years of experience in finance. And he also has his MBA. You're highly qualified, Henry. He, in the past, he founded a robo-advisory fintech product called Honest Dollar. And this was a venture capital-backed venture. It's going to be really fun to hear about that, Henry. And subsequently, it was sold to Goldman Sachs. He also founded MY Group, LLC, which was a retirement plan advisory firm. He had 10 years at Merrill Lynch. He was a vice president there. And in the more distant past, he was a White House intern under Bill Clinton. So really wonderful resume to talk about there, Henry. But first off, give us an idea about where you come from, how you grew up, what your family was like, and your influences early on that walked you down into this road.
So I was born in Dallas, Texas. The first person in my family that we could trace that was born outside of Japan. So I have a younger brother, but since I'm the older brother, I was the first one. And my parents had originally met in California. They were both from Japan, but they met in California, came here separately. And then somehow or another, I actually have never gotten a straight story on this. They ended up in Dallas, Texas, of all places. So by the time I kind of came about, that's where I was born. And growing up, I guess for me, biggest influences and sort of what took me down my path were that my parents came here as immigrants. They never went to college, so they were working respectively at different places in the restaurant industry. And for me, I guess money was always a difficult thing, something they didn't have a lot of. But we grew up pretty middle class, my brother and I, and they just always tended to make ends meet. And just growing up, I always thought I should learn about this stuff, money and the rules and how things work in America, because I didn't get a chance to get that from my parents because they were so busy working every day in the restaurant industry. But that just really fueled my passion to try to, just so you know, become a lawyer. That goes on the rules, knowing the rules, and becoming an intern at the White House, which was mostly a pre-law type of internship. But by virtue of circumstance, instead of going to law school, I went into financial services, and that's everything else we just mentioned is kind of what's developed from that point on.
Is your degree in finance? Business?
My degree was in political science, and I was very much pre-law political science, had studied the entrance examinations to go into law school, and it was very expensive to go to law school. So that's why I took a job in finance at Merrill Lynch, thinking that it's a big company. You should have a big company on your resume. This company just happened to be in financial services. And that's how I ended up in finance. And I just loved it and never went back to law school. And I have a lot of friends who are lawyers today who probably tell me that was a good decision for me.
I think that's probably a good decision, a very good decision. Tell me what attracted you to financial technology.
Well, so I worked in this financial services space, dealing, human to human, working with individual customers, or in my case, I worked with a lot of businesses in the 401k space. So my entire time at Merrill Lynch was really based on working with small companies with their finances. And indirectly, I was the representative for that company's 401k plan. But after 10 years at Merrill Lynch and then 4 years creating MY Group, which was a management consulting company with doing the same business I did at Merrill, it just got difficult doing a services business. And after that many years in one industry, you kind of find places that are inefficient, things that you could do better that maybe the big company would never think about doing. And instead of just kind of continuing this sort of professional consulting career for the rest of my life or rest of my working life, I decided at some point that maybe I should do something about it. And that became the first company or product that we created, that robo-advisor. And then once that cycle grew and was acquired by Goldman Sachs, then after a certain period of non-compete for building a new financial product, came up with a different idea in the form of Rocket Valve. So it was really just a desire to build something versus kind of just being in the non-creative mode.
So for our listeners who don't know what a robo-advisory financial firm is, explain what that does and kind of how people use that.
Yeah. So the technology world had created these sort of automated investment advisors, which now every major brokerage house has some version of their own. So at Vanguard, it's called Personal Advisory Services. And you could basically just use an automated system at a low cost where they manage your funds. I think in the more venture capital backed space, there's companies that are pretty well known now named Acorns or Betterment or a couple of them. And I had created another one of these. Mine was focused only on IRAs, but it's basically an automated investment tool. So people answer a few questions, and then depending on how they answer these questions, they would get put into a professionally managed portfolio. And the portfolio is managed by technology as opposed to humans. And these go into low cost, typically index funds at very, very low cost, maybe 10 to 20 of them. And they automatically adjust as time goes on and based on the risk tolerance and age and how people answer these questions. So that's what a robo-advisor is.
Sure. What do you think about robo-advisors?
I think that for people that are getting started out, which was the market for my last company, Honest Dollar, it's a great way to get started because in this sort of human professional financial services environment, it's not very attractive or cost effective to use maybe a live in-person human financial advisor when you're just starting out because they're paid as a percentage of your overall account. So you may not be a desired client, or you may not be a cost-effective client, or you may not even meet the minimum sometimes to work with an actual financial advisor. So I think in the beginning stages, this allows someone to get into a professionally diversified, low-cost portfolio up until they reach a certain asset level, which then brings more complexity, which then probably requires you working with someone in a more intimate and sort of direct human-to-human way.
That's a great answer. It's a great answer. What stimulated you to get your realtor's license?
Just, I'd actually, oddly enough, while I was doing Honest Dollar, I'd made a couple of private investments into technology companies that were in the real estate space. And there's always this sort of technology component, but then an actual real estate brokerage and traditional component to it as well. So I think I've always been someone who liked doing tests and sort of learning about new things. My hobbies tend to be more related to things like investing and maybe trying to learn a new tactic in the investment world versus playing golf or going fishing. So at that time, I had the opportunity to get the license. And as I just mentioned earlier, there was a 2-year period where I wasn't allowed to start a new company.
That's really interesting. So I have a question for you.
Sure.
You know how to start businesses. You're a serial entrepreneur. Did you train yourself about business, or how did you get your business chops?
Yeah, well, so this goes back to the not going to law school and starting at Merrill. And for me, my passion was really working with these small business owners and helping that business owner set up their first 401k plan. So then they have this great benefits on the investment side for recruiting purposes. And at the time I thought, okay, I'm at Merrill Lynch. I'm setting up these retirement plans, not working with individual high net worth clients. But I got paid to essentially set up these retirement plans and manage them for small businesses, some of which got much larger. But then the secondary benefit was that I spent all of my time actually getting to know the person who founded the business. So in a way, I had people that owned car dealerships, that owned hotel franchises, that started an architect firm, a doctor's practice, a law firm, manufacturing business. And over those 10 years at Merrill Lynch and continuing on to the consulting, I'd helped maybe 450 or so business owners of all different sizes, all different industries. And that just kind of became my network. So I don't think that I ever would have known how to start a business had I not been paid to go hang out with 450 business owners over a decade.
That's a big number. You saw a lot of interesting things, and you really learned how business owners solved problems. You had to have. So
you met an ecosystem that knew how to help you get things done. So like the legal infrastructure, who to have as your accountant, who to use as a payroll provider. The only thing I knew, to be fair, was once I did start a business, I knew exactly how to set up a 401k plan, but everything else I learned from someone else.
And you have your MBA, so that's super good background as well.
I got that afterwards to make sure that maybe I had a formal version, so that I got that towards actually the end of my year. So I didn't go straight through school, get a graduate degree. I went through undergrad, started working, and then at some point it was an employee benefit to offset some of the costs. And at that point, I thought, I think I should formalize some of this business training. I'm working with all these business owners, and I find myself sometimes I'm getting to the point in these conversations where I'm just nodding along, but I actually don't know what they're talking about. So just put me in a position to say, hey, I should take advantage of this company benefit and go get a formal business degree, of which I never had as an undergrad.
Yeah, very smart. Plus somebody else helps pay for it. That's really, really good. And anyone who gets in a position in a company like that, who can get education paid for, in my opinion, at least, you can tell me what you think, should take advantage of it.
I think it's, we live in a world today where whether you're an employee or an employer, you should always look and read about the rules and find out what your companies, if you're an employee of some organization, whether small, medium, or large, find out what they're offering you, which might be a match in the 401k, maybe a tuition reimbursement benefit. I mean, these are all things that some employers are now offering, because I would say that the leverage is probably more in the hands of your listeners now, if they're an employee, than it would be for the business owner, right? There are a lot of companies looking to hire people today, and it's very hard for them to do so. So they're going to offer things above and beyond just the paycheck and salary to get you to go work there.
Yes, it's a good time. Let me just ask you, you worked for Merrill Lynch pretty early in your career. How many women were in the financial industries at that point?
There were not a lot, but oddly enough, there's a very famous woman in financial services and now fintech herself, who actually is running a large robo-advisor called Elvest. Her name is Sally Krawcheck. She actually technically was the head of my entire division at Merrill Lynch towards the end of my time there, so that 2008 through 2010 timeframe. And I've never met her in person, but I have a lot of respect for her. And she was the head of all financial advisors at Merrill Lynch, which at the time when Bank of America took it over to the time I left in 2010, at its peak was probably about 18,000 people. And I could most assuredly tell you that it was very highly percentage majority male.
Yes. What do you think about financial services as a career for women?
I think it's actually something that is becoming much more prevalent. I think for women, I think they have a very different view towards a holistic view towards family. And I think we talked about this before the recording, that I live in a very sort of female-oriented household. I have two daughters, have a spouse, wife, and I have two female dogs. So in a way, I like to joke around that in my own household, whenever I get home from work every day, I'm probably at the bottom of the totem pole. But I do think that there's a real opportunity for women in financial services now, because I think they have a different perspective in sort of how financial planning goes way beyond looking at numbers and cents in an investment portfolio, and really how, I guess, investment, saving, and retirement is actually a part of an overall holistic picture for your life, with the other probably big barbell being health.
Yes.
And I actually personally think that they may be in a better position to maybe see the bigger picture, as opposed to just focusing on the numbers and cents, which is when I started at Merrill, the business and the training was very, very oriented to that. And just myself personally, I've gotten to the point where I could build these products, because I think that I have to take myself away from the numbers and cents and think about like how the world might be changing and what people need, and then using that sort of thesis or hypothesis to go back and build a product around it.
Yeah, that's a really great philosophy. I'm interested in the why behind Rocket Dollar. Why Rocket Dollar? Why did you build that?
Yeah. So I think it's pretty safe to say now that in most even financial publications that sort of tried and true, many decades long, 60% stock, 40% bond portfolio, you put it into a couple of funds and then just don't check your statements so you don't get caught up in the emotions of the ups and downs of the markets and your investments is no longer relevant in today's day and age. And what I saw after my last startup was that there's a whole new world of non-publicly registered investments that the average retail investor had a tough time accessing. And even if they could access it, the vast majority of investable wealth for the average retail consumer in America was actually locked up in some sort of corporate 401k and or IRA account. So for me, I see this one huge mega trend, which was that the 60-40 portfolio now might be giving way to the 60-20-20 portfolio, 20 being something that's not in the public markets. Then the other trend would be that even if you could access with 20% alternative investments, very hard and difficult to do so with people's long-term retirement type dollars with great tax treatment. And I happen to be someone with a unique sort of background to probably figure out a way to tap into those dollars so people can now create and develop and manage the modern retirement portfolio or the modern portfolio. That became the genesis for Rocket Dollar.
Excellent.
And my daughter was the one that helped me name the company. Maybe I could tell you that real quick. So
I do.
She was 6 years old at the time. My last company was called Honest Dollar, and we had the domain honestdollar.com. And this particular company is called Rocket Dollar, and we have the domain rocketdollar.com. And when I was sitting there thinking about the names of the companies, I was explaining this sort of that, hey, what we allow our customers to do is to go into things with their money that otherwise would be hard. And so my daughter said, I get it, rocket, you can go further in different places than you can go in a plane can go further into different places than a car and so forth. You can go further in a car in different places than you can walk to. So now you let people go to different places that are hard to get to with their money, hence Rocket Dollar.
And I just want to point out that the Rocket Dollar logo is a dollar bill folded up into a rocket shape like origami.
Yes, yeah.
And that says a lot about your company. I want to ask you these questions, Henry. Do you need to be a sophisticated and experienced investor to be able to function within the Rocket Dollar sphere?
You do need to have an idea of what sort of non-registered or non-public investment that you want to go into. Certain investments actually require our customers to attest that they have a certain income level or a certain net worth. But the reality is that if a lot of investments, even at a high dollar amount, don't require you to be accredited, is the term for that income and net worth threshold. So we have 30% of our customers that buy and sell investment property real estate, and they're using their own probably real estate professional to buy and procure that property. But I would say that their knowledge is because they've lived in their local geographic area and they know where it's good to own a rental property because they lived in the same town, let's say a suburb of Cincinnati. They know the other side of Cincinnati is a good place to buy a rental property. And then we allow them to tap into an old 401k plan to do that. Maybe that's a more tangible investment for them. So I don't know that the customers themselves, they do have to know what they want to buy because we don't provide that for them. So we are not, let's say, quote unquote, that robo-advisor. We don't just hand people a portfolio to go into. And they have to be comfortable and aware of some investment that's non-public that they want to go into when opening an account with us.
Give us the rundown on what the gamut of those might be besides real estate.
So it's real estate, whether directly into a property, real estate as a part of a small fund, real estate that might be available on a platform. Then we have customers that are taking some small portions of their IRA dollars and opening up an IRA with us to then use that particular money to go into things like cryptocurrencies, maybe invest directly into a small business themselves that their friend has started and so forth. So we kind of run the gambit from people doing small private real estate, private equity and venture fund deals to directly investing in companies to cryptocurrencies and then platforms that might offer alternative investments. And that could be things like securitized art, peer-to-peer lending, and so forth.
Yeah, those are all interesting things. Peer-to-peer lending, how do people get into that?
Well, most of either they have a direct opportunity to basically do, let's say, a loan, and then they come up with an agreement, and the funding vehicle just happens to be their IRA. But we find that a lot of our people are actually doing it more through a platform that's already sort of said, hey, you give this platform $20,000, and they split it up among a preset portfolio of 50 loans. And then you end up getting an income stream that presumably today is higher than if you just sat in a savings account in the bank, which is at historically low levels.
And what are some of those platforms, just so if people want to investigate?
Yeah, so one of the ones that's really popular for our customers, there's an Atlanta-based company called Ground Floor. The website is groundfloor.us, and they provide financing for real estate projects. But when you give them some set dollar amount, it goes into a number of deals, and it's a bridge financing for some real estate investor to acquire that property.
What kind of return on investment typically do you see from that?
It depends, because you can actually kind of tweak the portfolio. They do underwriting and sort of analysis on risk levels, but I think the typical returns, depending on the time frame, would be anywhere from 3% to 6%.
Okay, so a little better than what they can do otherwise.
Right.
And buying real estate, they tend to find their own real estate investment. What's your opinion about cryptocurrency, Henry?
I actually was talking about this with a friend of mine who's a very, very famous investor. He's a very successful financial advisor. And he's the one that kind of had to sell me on this too. But he does think that now that you don't need to dabble in all of the cryptocurrency. So cryptocurrency is a very broad term, right? There's a whole bunch of different coins that none of us have ever heard of. But the primary currencies are probably Bitcoin 1 and Ethereum 2. And he's a big believer that probably as just an overall long-term hedge, that Bitcoin should probably make up 5 to 10% of everyone's portfolio. And that difference between 5 to 10 is probably based on overall asset level, age, and risk tolerance. So let's say if you're young, then maybe it's closer to 10. But if you're wealthy and maybe closer to retirement age, it should still be 10. But if maybe your overall investable portfolio is in that mass affluent stage of $250,000 to $1 million, but you're in your 50 to 65 year time frame, age range, then it should be closer to 5.
Where do you think cryptocurrency is going?
Well, I agree with my friend now that I think that it will be something that will be here to stay. But like a lot of markets in their early stages, I think a lot of these sort of maybe more nefarious players, coins that no one's ever heard of, those are going to get flushed out of the market. And I think you're going to be left with the institutionally sound, true sort of investment vehicles. So I think it'll be here to stay. And I agree that it probably should be some sort of maybe 1/10 to 1/25 of an individual's portfolio, just for the sheer purpose that if it's a store of value and it does continue to go up, then you're not going to want to miss out on this particular thing. And I think that at this stage of the game, right, even at, let's say, 55,000 as we record this per Bitcoin, odds are that it's not going to go to zero. The odds are less that it's going to go from 55,000 to zero than it will go from 55,000 to something higher in the future at this point.
That's a good answer. I want to circle back a little bit. At the beginning, you said we no longer probably should be looking at investment portfolios in the way we have in the past in terms of what we're investing in and how it's apportioned. Tell me why that is.
Well, the way our sort of investment infrastructure works now, this 60-40 portfolio just doesn't sustain itself. So the problem when a 60-40 portfolio was originally introduced, let's say in the late 70s through the 80s, and espoused by a lot of financial advisors who preceded my generation that started in the year 2000, it was introduced because the investment monies that you had for 60% of your portfolios in stocks were very uncorrelated to the 40% that you had in bonds. So when one went up, the other one, basically probably went down. They were not correlated to each other. But if you look at it now, the U.S. equity markets are highly correlated to the U.S. bond market. So if you want to achieve a balanced portfolio with the highest possible risk-adjusted returns on the spectrum, then you can no longer do it with only 60% bonds and 40% or 40% bonds and 60% stocks. You actually need to introduce a non-correlated asset class. And then you start introducing, let's say, 5% in something like a major cryptocurrency that's recognized today as an investment and is offered by the large houses, as well as obviously newer technology-based providers. And then maybe things that have nothing to do from a tracking standpoint to the markets, which could include real estate. And real estate previously was very unattainable unless someone had the financial means to buy an entire house or buy an entire apartment building. And of course, if you do that, then you're concentrated in one investment. But now you have a world where there's several platforms that chop up, real estate into very small pieces, and you can buy 1/1000th of a house with a group of people, just the same way as you buy a mutual fund.
That's a really good explanation. I like it a lot. I wanted to ask you to just define for us what currently an accredited investor is, because not everybody follows that. Not everybody's managing, self-directing their retirement funds. It sounds like you like to work with people who are interested in that. Some people don't even know they can do it. But tell me what the definition now is of an accredited investor, the sort of person who's a more sophisticated, experienced investor who has a bigger net worth than maybe ordinary, who can direct. And of course, the government assumes that because you have a bigger net worth that you're more sophisticated, and that's not always true. And people shouldn't assume that of themselves either. But what's an accredited investor? What's the definition?
Sure. So let me just start by answering and saying that first, that our customers that go into, let's say, a private fund, if that private fund chooses to only make their product or their investment available to accredited investors, they're the ones that are gating, that particular customer of ours, not us. So to open an account with us, you just have to be qualified to open an IRA in the United States, which means that you have to pass an anti-money laundering and know your customer check, and you have to be a U.S.-based person who's over 18 years of age to establish the account in your name. But the definition of accredited, so for investments that choose to basically make that a threshold or a requirement to do their deal, right now that's currently defined as a married couple with a $300,000 a year household income and a $1 million net worth exclusive of the equity in their primary residence. And if you're single or you file taxes as a single or held a household, then you need to be an individual that makes $200,000 or more in income or have a net worth of $1 million, again, exclusive of equity in a primary residence. Those are the two rules.
Great explanation. So you have to meet those standards.
If the investment chooses to make those as a standard.
If they choose to make that a bar.
Right.
Right now, the House of Representatives is looking at new rules for retirement plans. I know you have been involved in that. Tell us more about why they're choosing to do that, why they're looking at that, and then what you're thinking about in terms of that.
Yeah. So when you say I'm involved, I guess I've been asked to give thoughts on it. So I'm not involved in any way in the legislation. So I'm not in the House of Representatives or in Congress to actually be involved directly in this. But there is a cohort in the House Ways and Means Committee in the House of Representatives that is proposing as one of the ways to help pay for an infrastructure bill at whatever level that may be, probably somewhere between 0 up to 3.5 trillion on the high end. And one of the components or one of the tools that's used to create some tax revenue to pay for this would be to limit the tax benefits of an IRA. So as it stands today, these proposals, currently one of them is to potentially pass a rule to where once an IRA reaches either a $5 million level or a $10 million level, that people can no longer accumulate money in their account on a tax-deferred basis. So you'd actually have to take investments or assets out of it, pay the taxes, and then stay below some threshold of either 5 million or 10 million. Another one is that people, this is probably something that a lot of your audience may be considering doing, because a lot of financial advisors actually think it's a pretty good strategy, would be to do a conversion from a traditional IRA, pay the taxes today in 2021, and convert the net amount that's remaining into a Roth. And that way you get tax-free growth going forward as opposed to tax-deferred and have to pay it. So these provisions are all right now proposed to be eliminated to generate more tax revenue to help pay for this infrastructure plan by a component of Democrats in the House of Representatives. And as I mentioned earlier, I vote that way personally. And my views that I've given publicly on this are that I think that it will affect few people on that $10 million cap. But I also think that if you kind of take away this long-term goal, and if people are willing to pay their taxes today and convert a traditional IRA to a Roth one, that's actually a good thing. People are making good financial decisions. And I would actually think that if you talk to 10 financial advisors who represent clients, that probably more than 7 of them will say that that's a pretty good strategy if you think tax rates will be higher in the future. And if you take that away, you're just taking away some flexibility and some right of a client who is well within rules that have been established for decades now to just take away some flexibility for how they might manage their money. And at least what I hear, people are not too open to that. Even if they may not do it, they just don't like the idea of some rule being changed on them.
Yes. It makes things unstable, and people don't like instability. And it's hard to plan.
Right. And then I'm not sure that it'll create enough revenue anyway. And these rules, just so you know, they probably came about because there are, some maybe 3-digit number of people that are tax filers in the United States that have very, very large IRAs. But I think if these rules go into effect, I think it's going to more negatively impact some, 7-figure number of people that are just trying to take advantage of, hey, I believe taxes will be worth more in the future. And while I'm working, I have $100,000 to pay today in taxes to convert my $500,000 IRA to a Roth $500,000 IRA. And for that right, I'm willing to pay $100,000 today to the government.
Yes, so it's going to have some unintended consequences if they take that through.
I think so. I think the unintended consequences are that, we as American citizens like to have our options, whether we, may pursue them or not. And people have sort of understood that this has been the rule for a long time, and people don't like the rules being changed on them. At least that's what, and I've worked with maybe thousands of people through my Merrill and consulting days, and probably now on Rockefeller alone, another several thousand people. So this is coming from a data set that's not necessarily my opinion, but kind of like the collective view of people that reach out to me.
Yes. FinTech is an interesting, financial technology is an interesting area, potentially lucrative for building that kind of business. Yes?
I would say so, yeah.
Yes. Did you see, you didn't see too many women at Merrill Lynch. What about in the financial technology arena? Are there women there? Is it a good place for women to be? What do they need to know in order to get into that space?
It's the same thing. So I have friends that are running very large, financial technology companies that are female-led, backed by female venture capitalists and so forth. But again, just like my old Merrill days, which was a generation ago at this point, but even today, probably, it's not 50-50 either. So I think there's room for improvement in that particular space. I wouldn't say that, it's an environment that is off-putting and against having participants from the female side. I just think that maybe, it's evolving and there are opportunities there. And there's some great female founders in this space running some really great companies. But again, the percentages are still probably too heavily tilted towards the male side.
So what kind of background do you need? Let's say you say, I think FinTech might be for me. I really like the idea. I like finance. I like technology. I think I could make an impact there. I'd really like to serve maybe particularly women. What kind of background would you start with? So
for me, I kind of I was this person that worked in the traditional industry for the incumbents for a really long time, which as long as I kept my sort of mind open to it, you can find inefficiencies and opportunities for you to maybe start a company or some product from zero and make an impact. And I learned, although, I also come across a lot of fintech entrepreneurs who have no background in financial services. And because of that not having any existing biases, of which I'm probably full of many of them, they are just as powerful and just as good at creating some sort of new innovative technology. So it's, I don't know, there's probably, those two sides of the coin and then everything in between. I just happened to be the one that came from I worked in the big company. I saw where there was an opportunity, and I was very fortunate enough to be frank, have the support of capital providers to let me build it. I think if anything, the background that people need, or maybe, where the problem can be fixed, would be the providers of capital to start financial technology companies. They need to make the effort to make sure that the money that gets distributed to people to take a chance and create a business in this space is evenly distributed to maybe not just females, but even people like me that didn't grow up with money.
Yes. How do you make that happen? How do you do that? I mean, I know more women venture capitalists than I used to, but how do you make that? Does it take that? Does it take having more women in the venture capital space?
Well, look, I think probably, to be fair, at the end of the day, the venture capital industry is really driven by, what has the potential to generate the highest financial returns, because that's something that they have a responsibility legally to the people that provide them capital, the limited partners in their funds. So I think probably one of the best sources there is that data and a lot of the information that kind of dictates that the more diversity contained within the companies and the people that you back, it actually has been proven to generate better returns. So I'll use, let's say, financial inclusion, or maybe democratization of financial services. Is someone who grew up as a wealthy person who went to a private school and then went to an Ivy League school for their undergrad and graduate degree, the person who's going to have the best personal perspective to solve a problem for lower middle class Americans when it relates to something in financial terms? The answer is probably no. You find someone who, experienced that upbringing or lifestyle or hardships firsthand, provide that person the capital. And if it's proven to show, female, male, or otherwise, that your return or your chance of returning capital or having a very successful company is 2 times higher, then the venture capitalist will make that bet. The data shows that's usually been proven to be the case.
Agreed. So having that data helps to drive that. I like that.
Yeah. And as long as they can see that, because that's an objective. That's not telling someone that you should make an investment in an underrepresented founder. That is more that, hey, the data literally shows that you're more likely to make more money. I think that's the language they want to talk about.
That's the language.
In my personal experience.
Yes, that's the language they speak, and rightfully so.
Right.
Thank you so very much, Henry. I've really enjoyed talking to you. You clearly have deep expertise. I'm so impressed with what you've accomplished, and just great. And what you're offering now also. It's nice to have that available in the retirement fund space. And thank you for the comments you're making as regards what's being attempted in the House of Representatives with the new rules for retirement plans. And it's interesting that we have that opportunity now to comment and have people like you who have deep expertise to comment. So thanks for doing that. If you were going to leave women, aspiring women, with some actionable advice today, right here, right now, something that they could take action on, what would it be?
Yeah, I just talked to a friend of mine who has just raised a $10 million Series A for her technology startup. And I'll paraphrase maybe what she said, but she told me that she already started at a disadvantage, by being underrepresented, not going to the right schools and not probably being the right gender. And she said early on in the life cycle of the company, she said that she tried to mold her story and her company idea to fit what she thought the investors wanted to hear. And then the problem was that she didn't come across as genuine, right? Because she's trying to fit her story to fit that particular investor for capital. And when she came to the realization that, I need to stick to who I am and what I want to build and why I'm doing it, then eventually I'll find the right investor who knows that pure play investment is the best opportunity for them. So I guess the advice I'd give is that you don't change who you are and what you want to build and the company you want to create to try to fit someone that might provide you capital for it. You stick to your why, people are going to realize that you're true, genuine, and transparent, and you will end up finding the right capital provider because they realize that you're passionate and you're really going after your true, the business you truly want to create, not the one you think they want you to create.
That's excellent. So you heard it from Henry Yoshida, be authentic.
Yeah.
If you want to get capital, if you want to do anything else, be authentic and you'll find the right match. Your problem is someone else's solution. Just remember that. Very good. Henry, thanks so much for coming on. I really appreciate it. You've talked about a segment of wealth building that not everybody is completely thrilled about, but you really have obviously lots of passion for if you'd rather do financial training than you would go fishing. So that's I can tell that you really love this stuff. I've so enjoyed talking to you, and every time I talk to you, I enjoy talking to you. If someone wants to reach out to Rocket Dollar and get more information about what they should be learning and how they could get involved with Rocket Dollar, including your free